Grade 11, we're going to look at your task 12.12 in your New Era Accounting textbook. So if you want to, you can quickly fetch your textbook and refer to the information in this textbook during the course of me explaining this to you. The balance owing to SARS on 1 March in respect of VAT is 3,500. Total extracted from the journals. These totals do not include VAT. If they don't include VAT, we're going to do our what I want over what I have, and my have will for each and every one be 100 because they do not include VAT. I'm going to move the textbook away because you can now use your own textbook. We're going to start with the explanation again. A reminder, the VAT control account increases on the credit side and decreases on the debit side. Our output VAT, that means our sales, cash or credit, is usually recorded on the credit side because that will increase the amount we owe to SARS. And the input VAT is on the debit side because that will decrease what we owe to SARS. And in every transaction, we are looking for the VAT amount only. So let's start. When they tell us that we owe SARS or that Soweto Traders owes SARS, it means it's a liability, and this 3,500 is owed to SARS, and that is the balance brought down. If the balance of the VAT control is not on the credit side, the information will tell you that SARS owes the money to the business. And if that's the case, the balance will be on this side. Our first entry, credit sales of trading goods. A credit sale is output VAT, so that's going to be my debtors control. My debtors control, and the amount is 28,000, and I've got to times by the 15 and divide by the 100, and that is 4,200. Next one, credit purchases of trading stock. I know that purchases is from the business side, it's input VAT, and that is creditors control because it is credit purchases. And the amount is 29,000 times 15 divided by 115. Oopsie, that's not right. It's because I've done the inclusive and it is exclusive. 29,000 times 15 divided by 100 is 4350. 4350. Please remember that everything is exclusive of VAT. It does not include VAT. Cash sales of trading stock. Cash sales, it's output, it's the customers buying, but this is cash. So we say it is bank. And the amount 52,000 times 15 divided by 100. 52,000 times 15 divided by 100 or times 15%, 7,800. Next, cash and checks or cash and EFTs received from debtors in payment of accounts. Guys, payments, money, there is no VAT. No VAT on money. So even though they tell us that there's accounts being paid, there's no VAT there. We've already charged the VAT on the invoices. Cash purchases of trading goods. Cash purchases, input VAT, because it's the business. Cash purchases, 21,000 times 15 divided by 100 is 3,150. And all the amounts we write on this side is what we want to claim back against these amounts that we've charged. The next one is checks issued to creditors in payment of accounts. Remember, there are no checks anymore. Payments to creditors in payment of accounts, no VAT on money. Nothing. We don't do anything there. Check payments to SARS in part payment for VAT. Now we're going to pay SARS for what we owe them. And the amount here is the check payment is 7,200. So it's VAT that we pay to SARS. Now remember, when we pay, bank is credited. Therefore, my SARS VAT control must be debited, 7,200. And this is also bank. And if you want to, you can say for yourself, payment, to just explain to yourself what you've done there. It is the business paying off 7,200 against what they owe. So there's no specific VAT amount on this. This whole amount is actually the VAT that they're paying off. Returns of trading goods to creditors. Now, when we bought stock, we recorded it here. So when the business returns stock, they will record it there. And that is creditors control. Because when we return the stock to the creditors, we can't claim back that VAT on that amount anymore. 4,800 times the 15% is 720. Then returns of trading goods by debtors. When we sold to the debtors, we charge them VAT. When they return, we can't charge them that VAT anymore. So this is going to be, it is debtors, so it's debtors control. And the amount is 3,600 times the 15%, which is 540. Bad debts written off for the month, 2,900. When we sold stock, it was on the credit side. If what we've sold is not going to be paid, we are not going to pay that amount to SARS because we never got the money and will never get the money for that bad debts. So we write it off on this side, and again, it's debtors control. And if you want to show yourself, you can say, oh yes, this was for bad debts. And the amount is 2,900 times 15%. So it's 435 is the VAT amount on the bad debts. Discount allowed to debtors for prompt payment. So now this side was when they bought the stock. Now they're coming to pay. There's no VAT on the payment, no VAT on the money for their account. But we give them discount. So if we give them discount, there's no real money involved. But this discount here is going to decrease the amount that we charged them for VAT. And that means that we're going to pay less VAT to SARS. Debtors control again. And to explain to yourself, it is discount allowed. And remember, guys, discount allowed is always on the debit side of your VAT control account. And it is 4,400 times 15%, which is 660. And the last one is discount received because we paid promptly. So when we bought, it was here on the debit side. And we claimed an amount. All these amounts we claim back from SARS. But when we receive discount, it means that we're not going to pay that amount, and therefore we can't claim that amount anymore. So it's going to be creditors control. and it was for discount received. Very important. If you really do not follow what I'm explaining here, if you really don't, first choice is that you do. But if you don't, you can literally learn this off by heart. It is always like that. And that is 3,500 times 15%, which is the 525. And now we need to find out, what do we owe SARS? Or perhaps they owe us. Let's hope they owe us, eh? Let's hope that what we claim back is more than what we charged. Now remember, it can happen that SARS will pay us back because stock that we've bought and that we are claiming the VAT back on is not yet sold. So let's start. 3,500 plus 4,200 plus 7,800 plus 720 plus 525 is 16,749. What do you think? Which side is going to be the biggest? Let's quickly check the other one. Minus 4,350 minus 3,150 minus 7,200 minus 540 minus 435 minus 660. Oh, and that side is definitely bigger. So unfortunately, we count it all again. 3,500 plus 4,200, 7,800, 720, and 525 is 16,745. 16,745. 16,745. And now the difference between the two. Remember what we said. If the answer is positive, then we owe SARS. And I'm just deducting 435 and 660. The answer is 410 and it's positive, and it must be on this side, and it is balance carried down and balance brought down 410. And this is the 410 Rand owed to SARS. I hope that helped. So make sure that you understand what I've done here, and then we're going to do another activity which you can do all on your own.